Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody guys. Today we'll take a look at the euro currency. Well, yesterday our setup on the cable has been absolutely destroyed by the data release that has shown that the inflation in the United Kingdom has jumped significantly, and that has led to a significant rally on the Great British Pound. As a result, our bread and butter hasn't quite reached the target on the daily chart. We haven't got another second possibility to enter short with this bread and butter, but at least the double repo buy has worked, although it has worked a bit stronger than we have initially suggested. This was really absolutely amazing rally on the Great British Pound. That's why, guys, in the current situation, as an example, you could see why I every time call you to move your stop to the break-even when the time has come to this moment. So when the market shows some sufficient action in your favor, in the direction of your position, you should apply this tool as the moving your stop to the break-even. This is a very important tool, and it will save a lot of money. But the one moment that you should escape is to move the break-even tool too early. I mean the moving this break-even stop loss to break-even point too early, because usually you should apply the harmonic swing. So on euro currency, this swing stands approximately for the 40 pips. So as soon as market will pass, if you trade on the daily time frame chart, on the 4-hour time frame chart, if market will pass approximately 40 pips, you could move your stop to a break even. If you trade on the lower time frames, you should calculate and watch for the swings and the corresponding time frame and find the harmonic swings there and apply the corresponding numbers to your stop loss. It will depend on the time scale that you trade. On the 5-minute charts, it will be very small. Then higher you are moving, the greater the harmonic swing becomes. So, but the break-even, stop to the break-even is a very important feature, and you should not forget about it. So that's why on the Great British Pound, guys, although the monthly bearish grabber is still valid, that's why we can't exclude the chance that market could turn down somehow. But currently we should probably we will postpone the analysis of the Great British Pound on the later times, because we need to see what will really happen, how the situation will lay down there. Just this market should come down a bit, and we should see what really will happen. As soon as we will see some clear signs of patterns, we could return back to the discussion of the Great British Pound again. But as soon as the euro currency also has shown some progress, we could dedicate some time to this currency. So as you remember, guys, our last conclusion on the euro currency was about the bullish context. We said that already, although we do not have clear strong patterns, but we have the trend. This trend is bullish, and although the market doesn't show the impressive action, at least on the weekly chart, on the monthly chart, the action was really flat and lazy, but still we have the bullish trend, and that's why we could treat the overall context as the moderately bullish, as the weak bullish context. So this tells us that we probably should watch the chance for taking the long position. Second important moment is the action with this retracement, how it has happened, because as we suggest that market is bullish, it should react on the support areas correspondingly. It means that as soon as market has shown the meaningful retracement, and if it's really bullish, it should bounce out from this retracement and continue to move higher. That's how bullish markets works. If it doesn't do this, it means that it's not quite bullish. It's a very simple logic. Till that moment, market behaves logically. It's absolutely natural action. So what we have to first up, retracement right to the 50% support. That is absolutely normal. So I contract the chart, you will see it. It's the 50% whole thrust up. Market has retraced right back down to the 50% level. Also, it has completed the harmonic swing. That is distance equals to that one. We have estimated this in our weekly research. So as market stands, as you can see in the parallel channel to the upside, usually when the market stands in the ranges or channels, it usually shows very harmonic action inside of it. I mean the harmonic swings. So here we have swing up, retracement down. This again, here we have swing up, retracement down. It means that this one should be some kind of that leg. Okay, it's probably we could watch for some area around 115 as the possible target. This also will be approximately the 618 extension of this most recent ABCD pattern to the upside. What we have next after this retracement has happened, I just would like to explain you the market mechanics because it's very important. Market here, it has moved above the monthly pivot point. That's great. Turns to some retracement down, and we said that should be the minor retracement because market already has done the major one. It should not show another deep retracement because it already has happened. All that market could do that we could accept is just minor retracement and upward continuation. If market will show deep retracement, that's not quite logical for bullish development. That's why we said we could accept some retracement on the intraday chart, but market should stop somewhere around this area, around weekly pivot point, monthly pivot point, and turn to the upward action again. And that really has happened. So that in general confirms that market relatively bullish. So it's maybe not really strong bullish intentions, but still market at least somehow follows the normal market mechanics and it shows logical action. And simultaneously, guys, take a look. Market has formed the bullish grabber. That really big relief for us, and that gives us some advantages and give more confidence that market really could continue move higher. Although the target of this grabber, the minimum target, stands just here. It's very close to the current market. But it could become the just triggering point, triggering pattern for a bit higher action to the upside. What's another significant moment? Guys, if you take a look at the forward time frame chart, you'll see that market also has formed a reversal swing. Take a look. This swing down is smaller than this swing up. That's also bullish sign. Here what we see, retracement in fact has happened right to our area. It's confidence support, monthly pivot point, weekly pivot point. Market has held above it. And guys, take a look, by the way, it's again has done the 50%. Spike down for this confidence and has reached right the 50% support. The euro lies the 50% support levels. So, and turns to the upside. In fact, guys, I will open you the circuit to you that this overall framework is nothing more but the Minesweeper entry technique by the Jet Napoli in relation to the daily time frame. So we said that we could think about the taking the long only when the trend will shift bullish on the daily chart, right? As soon as the trend shift bullish, this was here, happened right here, we could wait for the minor retracement on the intraday charts to take the long position. And that really has happened yesterday. So we have waited for the confidence, taking the long position here, and market turned to the upside. Right now, those of you who have taken long position here, you could tie your stops to this area or place them just below the grabber. Because market, following the logic of the bullish market, it should not return back down and break through the confidence. That will be the bearish sign, and it will lead at least market to the previous lows or even lower. So here market should continue move higher. So that was in fact nothing more but Jet Napoli Minesweeper technique. Better to say Minesweeper B, because we have entered not at the first fifth support, not here, but here we also discussed the entry. But we have entered on the confidence support. Now, guys, as we have the grabber in place, we could stick directly to this pattern and could use just most recent swing, this one swing for trading. So if we take a look at the hourly chart, what we have, so thrust up, market already, unfortunately or fortunately, already has done the trade minor retracement here. And right now it's forming the butterfly, so probably it will hit 127 or even 1618 because the currently upward action is really fast. And after that, if it will turn to some retracement down, you probably could try to take the long position based on this grabber pattern. But keep in mind that today will be the Fed press conference, Fed rate decision, and that really could impact the markets. So that's choices up to you where you would like to dive in this turmoil or wait for the results and then take any trades. But currently, while market still is relatively quiet, so we consider this behavior absolutely normal and logical. Current technical picture suggests that probably market could show further upward action and at least will take it out of this top. That is the result of the grabber. But as I said, grabber by itself could become just the trigger and pattern for further upward action. So here we could probably pretend on some 115 area maybe. So if we will place the expansion here or even the greater target. Let's see where the 1618 extension stands. It's right here, right? It's approximately 1620, but who knows where the market will reach this area or not. We will see. Because here, guys, if we're following the harmonic swings, you'll see that market shows the deep retracement back compared to this swing. But whether it will hit this area, it's very difficult to say. Maybe not. Maybe if we'll take this one, that's more reliable. Small stress and swing up. ABCD 618, 115.10. Right. Probably it's better to use this target, just more conservative, and it's more probability that market will hit it. So that's our current view on the euro currency. We'll see what will happen. And be aware of the Fed statement and the Fed minutes. So this really could bring the volatility on the market.